Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 10th of June 2024. So this week we have US CPI and the Federal Reserve's meeting both taking place on Wednesday, which puts the dollar into a sharp focus. Now, at the start of this week, we've seen the dollar rally, continuing its move, especially against the euro, which has been hit in part because of the outcome of elections in the eurozone. And we've seen the breakdown of a key support area between 107.85 to 108.05 area, which is where we also had the 200-day moving average converging. So the breakdown below this area has turned the short-term technical bias bearish, and so we could see some further follow-up technical selling in the days ahead, especially if the FOMC turns out to be more hawkish than expected. From here, it looks like 107 could be the next downside target, followed by the potential bullish trend line. I say potential because we've only tested it once, right? So if we test this again and it holds, then we will have a more confirmed trend line. That trend line comes in at 106.50 area, depending on how fast or otherwise price gets to it, assuming it does at all. On the upside, the most important resistance area now is this former support region, as I mentioned, between 107.85 to 108.05. From a bullish point of view, we'll need to see the euro dollar go back above this area to tip the balance back in the bull's favor. Now, while the dollar is rising against the euro, it's not rising across the board. For example, the Aussie dollar is positive at the moment. The US dollar is weaker after this currency pair found support at 65.80. This level was previously support and resistance. We're seeing a little bit of a bounce here. However, the key area of resistance that needs to be reclaimed is between 66.25 to 66.70 area, the shaded orange area, which was previously resistance before we broke above it, but that breakout didn't hold and we have now gone back below it, breaking in the process below the 21-day exponential moving average as well. So from a bullish point of view, that area needs to be reclaimed before we can turn positive on this currency pair again from a purely technical point of view anyway. The dollar CAD rallied sharply on Friday on the back of the US jobs report, but it is coming back down today in part because of a recovery we are seeing in oil prices, which I'm going to come to in a minute or so. Now, a couple of levels to watch on the downside include 137.35, which was resistance on multiple occasions in the past. We've finally broken above it. If we go below that, then 137.10 is going to be the next key level of support to watch, which was the high from Thursday's range before we broke through it on Friday. So the key area to watch now is this area here on the downside. Any move below Friday's low, I think that would put the bulls in a spot of bother, which could see a sharp withdrawal of bids, leading to a sell-off. Crude oil is back up at 2.5% today. It's making back sharp losses from the previous couple of weeks. Right now, it's inside this bearish channel. So despite the recent recovery we're seeing, it's not completely out of the woods yet. Right now, it's testing the 21-day exponential moving average, which is pointing lower. So it could turn lower from around these areas, with further resistance seen around the resistance trend of this bearish channel, which comes in at 78.75 or thereabouts. For the technical bias to turn completely bullish, we'll need to see a higher high, and the most recent high was formed in May at 80.63. So that's the level to watch for a possible breakout in the days ahead. If that happens, then we will turn bullish on crude oil again. But for now, because oil prices are in this bearish channel and given concerns about rising non-OPEC supply, we could see some further short-term weakness. On the downside, key levels to watch include the reclaimed level of support or price support at around 76.40 area. Below that, we have the shaded region, which acted as support last week, around 73. And if that level were to give way, then the next downside target could be 70, the psychologically important level. Now, for more market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.